I now hand the conference over to Mr. Siddharth Rangnekar from CDR India. Thank you, and over to you, sir.
Thank you. Good afternoon, and thank you for joining us on DCM Shriram Limited's Q1FY20 earnings conference call. Today we have with us Mr. Agri Shriram, Chairman and Senior Managing Director, Mr. Vikram Shriram, Vice Chairman and Managing Director, Mr. Ajit Shriram, Joint Managing Director, Mr. K.K. Kaul, Whole-Time Director, Mr. J.K. Jain, CFO, and Mr. Amit Agarwal, CFO Designate of the company. We will begin the call with opening remarks from Mr. Ajay Shriram and Mr. Vikram Shriram, following which we will have an interactive question and answer session. Before we begin, please note that some of the statements made on today's call could be forward-looking in nature, and a note to that effect has been included in the conference call invite circulated earlier. I would now like to invite Mr. Ajay Shriram to give us a brief overview on the company's performance and his views going forward. Over to you, sir.
Thank you, Siddharth. Good afternoon, ladies and gentlemen, and a very warm welcome to the company's earnings conference call. Businesses today are operating in a challenging economic environment because of COVID-19, which is unprecedented. The diversified and integrated portfolio of agri-related and chlorovinyl businesses and continuous focus on costs helps us in managing our businesses better in such an environment. Our agri-related businesses have shown resilience to the effect of COVID-19, given its lower spread in rural India and better Rabi season and normal monsoons. Additionally, the steps taken in our sugar business over the last 2-3 years towards integration as well as exports has provided stability to its performance. Agri-related businesses have witnessed good growth over the same period compared to the same period last year. However, our chlorovinyl segment witnessed twin impact from lower capacity utilization and lower prices. With the easing of the lockdown by the government, these businesses resumed operations in a phased manner and are currently operating at 70% and 85% for chemicals and plastics respectively. The Fenesta business also has started picking up and is operating at about 65% of its capacity. These businesses recorded lower revenues and earnings during the quarter. Now I would like to share with you the business-wise developments. First is sugar. Sugar season 1920 is expected to end with a total production of approximately 27 million tons and domestic sugar stocks at about 11 million tons, about 5 months consumption. This season, the total diversion of sugar through B-heavy molasses for ethanol was 0.9 million tons versus 0.6 million tons in the last season, and through exports is expected to be approximately 5.5 million tons vis-a-vis 3.8 million tons in the last season. This has helped in managing inventory levels. There is a requirement for continued support from government on sugar exports as well as B-heavy molasses to ethanol to manage domestic sugar inventories. During the sugar season 1920, we diverted about 5.05 lakh quintals of sugar through B-heavy molasses versus nil in the last season. Export quota allotted to us is 22 lakh quintals, out of which we have exported 17.26 lakh quintals till June 20th, and balance will be exported by September 20. Last season, we exported 9.22 lakh quintals of sugar. But for these measures, our working capital would have been higher by approximately 750 crores.12.32 we sold higher quantities of sugar at 21.32 lakh quintals versus 12.07 lakh quintals in the same period last year, including exports of 5 lakh quintals versus 0.5 lakh quintals in the last quarter. Sugar inventory as on 30th June 2020 stood at 34.53 lakh quintals versus 41.19 lakh quintals last year. Ethanol sales were up at 286 lakh litres versus 129 lakh litres in the last quarter as a result of the new 200 kilolitres per day Ajwapur distillery. We must compliment the centre and the state governments for their support to keep this business running throughout the lockdown. Chemicals. Chlor-alkali businesses was adversely impacted by multiple phases of lockdowns announced by the government during the quarter. We have ramped up capacity in a phased manner since April 2020. Given the demand scenario, we are operating at about 70% in our Bharuch facility and about 90% at our Kota facility. While the stable chlorine demand led to a rise in operating rates, recovery in domestic caustic demand has been slow, which has caused prices to remain under pressure. The consuming industries of pulp and paper and textiles are still operating at suboptimal levels, leading to lower demand. On the international front, the caustic soda exports have increased during the quarter, and prices have been stable in the range of about $250 to $280 FOB, US dollars. We expect demand to build back in the user industries gradually as the economy revives. We are making efforts to penetrate newer markets as well as enlarge our customer base to enhance production levels. We are finalizing our plans for chlorine downstream products. Impact of disruptions caused in demand supply chain due to COVID-19 will determine the timing of these investments. Plastics. The domestic demand declined during Q1 financial year 21, impacted by lockdowns in the wake of COVID-19. The production was affected largely during April and May 2020. It has improved in a phased manner thereafter, and the current capacity utilization is approximately 85%. The PVC realizations were lower during Q1 financial year 21 due to substantial decline in international prices. PVC prices started improving since June 20 with recovery in the international prices. International prices are currently at a level of approximately $860 per metric ton from a low of around $700 per metric ton in April-May 2020. Given lower operating rates globally, the prices are likely to remain supported. Commissioning of the new 66 megawatt power plant at Kota has significantly improved power efficiencies for chlorovinyl at Kota. Fuel rates have also reduced over the sequential quarter. Agri Inputs. This segment covers our Shriram Farm Solutions, Bioseed and Fertilizer business. Agri Inputs were classified as essential items during the COVID-19 related lockdowns. The company took proactive steps to ensure that the products reached markets well in time and there was no supply disruptions. All three categories of SFS businesses, that is seeds, specialty nutrition and crop care chemicals, witnessed growth with an overall growth of 26% year-on-year in Q1 financial year 20. With normal monsoon and focus on research, the business expects to maintain the growth momentum. Bioseed India revenues showed a good 23% increment driven by higher sales for corn and hybrid paddy. Our research activities have ensured a strong pipeline of products. Timely rainfall advanced the sowing activities, and the timely sowing activities will certainly have a positive impact on the field. Our operations at Philippines have run in a steady state. The fertilizer sector has delivered normal volumes in Q1 financial year 21. As expected, the subsidy outstanding has built up to 660 crores given the impact of 19 on government finances, and that is a serious matter of concern. Lower gas prices will help reduce the build-up to a limited extent. Fenesta. Fenesta has seen a negative impact owing to restrictions due to COVID-19, given that we offer premium solutions that are customized as per end-user requirements. The business has started operating since May 20 and presently operating at approximately 65% capacity, which is better than our expectations. We envisage a gradual return in this business. Our energies are focused on driving higher efficiencies and better synergies. COVID-19 has given us an opportunity to reimagine the way we operate and optimize our operations and costs. We are emphasizing on restoring normalcy in utilization levels across the impacted segments, even as we carry forward our efficiency and growth initiatives. Through the first quarter, we continue to report positive free cash flows. We are maintaining adequate liquidity and are working on further strengthening the same on a sustainable basis. Our balance sheet has strengthened further with reduced debt levels during the quarter. These steps will ensure that we sail through these tough times well, as also continue our growth initiatives. With that, I would now like to request Vikram to take you through the discussions on our financial performance. Vikram, over to you.
Thank you. Good afternoon, ladies and gentlemen. I will now take you through the financial highlights for our Q1 FY21 results. Net revenues during the quarter came in at rupees 1,912 crores versus 1,902 crores during Q1 FY20. The agri-related businesses, that is sugar, urea, bioseed and Shriram Farm Solutions, recorded increase in revenues from rupees 1,010 crores to rupees 1,490 crores. All these businesses recorded volume growth over last year. Chlorovinyl and Fenesta segments reported drop in revenues from rupees 846 crores to rupees 387 crores this quarter. The volumes dropped due to COVID-related disturbances contributed approximately rupees 350 crores to the drop in revenues of Chlorovinyl and Fenesta. Chemicals operated at a capacity utilization of 51% for Q1/21. It has reached about 70% now. Plastics recorded capacity utilization of around 44% for the quarter and is operating at 85% approximately now. Fenesta had nil sales during April 20 to early May 20 and has now reached approximately 65% of operating levels. The prices for chemical businesses continue to decline. ECU realization is down 38% approximately year on year and 8% quarter on quarter. The price seems to be stable since June 20. PVC prices had a sharp drop in April and May 20, but have recovered in June and are holding at higher levels. PBDIT in Q1/21 stood at rupees 192 crores as against rupees 374 crores in Q1 FY20. The PBDIT was adversely impacted with low volumes due to COVID disturbances to the extent of approximately 110 crores and due to lower prices in the chloroalkali segment by approximately 103 crores. Higher profits driven by higher revenues from urea, Shriram Farm Solutions, bioseed businesses, and returns from projects commissioned during FY20, that is, the 200 KLD distillery and 66 megawatt power plant, mitigated the above adverse effects partly. Planned reduction in fixed costs during the current year also provided part cushion during this quarter. On the balance sheet front, net debt stood at, as on 30th June 2020, at rupees 1,167 crores as against 1,623 crores as at 31st March 2020. The company took determined steps to export sugar, to maximize ethanol sales even to distant locations, to maximize collections and rationalize Kpix. These steps helped in positive free cash flows during the quarter and thereby reduced net debt. We plan to keep pursuing these initiatives going forward also. Realization of government dues is a matter of concern given the tight government finances. We are working through industry associations for recovery of these dues. The execution of the expansion projects is being planned in a phased manner, keeping in view our cash flows and market dynamics. We are keeping our full focus on our debt at safe levels and comfortable liquidity position at all times. That brings me to the end of the financial discussion, and we will be happy to take questions that you may have. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and one on your touchtone phone now. To ask a question, participants will press star one. We have a first question from the line of Rohit Nagraj from Sunidhi Securities. Please go ahead.
Yeah, thanks for the opportunity. So on the caustic chlorine front, you have mentioned that demand from paper and pulp and textiles has been relatively lower. Could you just give a sense of how has been the demand shaping up across other sectors?
If you look at the other sectors, which are basically on the aluminium side, on the soap side, they are actually picking up a little bit, which is a good thing. That's a positive direction which is happening. In the last couple of weeks, we found that paper and pulp has also picked up a little bit. But I think textiles is a sector which is unfortunately not picking up, and that is creating a problem.
Okay. And in terms of chlorine, you mentioned that we'll be probably going in for some chlorine downstream products. So any sense on that, and how much is the current chlorine utilization captively?
We are looking at various chlorine downstream products, but as Vikram has also mentioned, I have also mentioned that considering the unfortunate situation for the last 4-5 months of this corona crisis, we are revisiting our investment plans because we don't want to get into a debt situation. So we are revisiting that, and we are refocusing and studying various projects right now. So something will happen in due course of time. It's difficult to give a time frame for that. In terms of chlorine, our captive consumption is in Kota, it's fairly high because we make PVC, so that goes in over there. In Bharuch, we are using some chlorine into aluminium chloride, so that is going in there also. But the interesting part also in our Gujarat factory is approximately 36-37% of our chlorine production goes by direct pipeline supply to consumer industries. So we don't have to put it into tunnels. It goes directly to consumers who are, within our periphery. So that goes by direct pipeline. So they are virtually like captive users, and there's a direct supply to them. And we are building on that further. So we are hoping that we get some more people and who will take chlorine directly. And of course, when our chlorine downstream comes in, then automatically more will go into that.
Right. Thanks, sir. The last question on the projects and Kpix for this particular year. So I think in the last con call you had mentioned that the 1,000 crores caustic soda expansion at Bharuch will be there. Apart from that, anything else? And what is the overall plan of Kpix for FY21? Thank you.
As we mentioned, we spend approximately 110-120 crores for normal Kpix upgradation of all our plants annually. So that will carry on because we are not compromising on safety or health of the equipment in any manner. But the other investments, which is for the power plant and the chlorine expansion, as we mentioned earlier, we are revisiting this because of the economic environment, because of the pricing, because as someone mentioned earlier also, I think it came up that competition is coming in. So we are revisiting that, and we take a decision in due course of time.
All right, sir. Thank you so much.
Thank you.
Thank you, sir. A reminder to participants, to ask a question, please press star followed by 1 on your touchtone phone now. We have next question from the line of Prateek Tolia from Elara Capital. Please go ahead.
Yeah, thank you so much for allowing me to ask the question. Sir, firstly, on the chlorine front, what could be the current chlorine prices, or maybe during the quarter, was it in the negative territory?
JK?
Yeah, the chlorine prices in Bharuch have been running positive throughout last year, and they continue to be positive. Of course, not very significant, is roughly 1,000-2,000 rupees range positive. Kota has been running negative last year also and continues to be negative by equal number.
Okay. And sir, what would explain this, in the chart that you have given in the presentation on the ECU realization and the CFR prices? Sir, if you see during the quarter, the import prices were steady at around 298 to 295, but our domestic prices have come down from 23 to 20. So it's largely to do with the chlorine prices coming down, or it is the overcapacity, or how do you explain this decline in the domestic prices more versus the export prices?
Essentially, Pratik, is reflecting that there is domestic surplus, so which is leading to the domestic prices of caustic soda being lower than the landed cost of imports.
Okay. So once this
it used to be landed cost of imports equivalent, but because of some domestic surpluses right now, there is this discrepancy. And industry is tackling it by making aggressive efforts to export caustic soda so that some parity is restored.
Sure. So by when can we expect, do you expect this to happen in the next 1 or 2 quarters, the prices between import and domestic?
To say, it will be driven by, like CMD mentioned, what happens in the textile sectors and paper sector. So therefore, what happens to demands will drive this. Of course, the good thing is there is no new capacity coming in between now and last quarter. So it's largely dependent on demand only.
Sure. Right, sir. That's it from my side. So thank you so much.
Thank you.
Thank you, sir. Anyone who wishes to ask a question may press star and 1 on your touchtone phone now. We have next question from the line of Prateek Kumar from Antique Stock Broking. Please go ahead.
Hello.
So please go ahead.
Yeah. Hi. Good morning, sir. Sir, my question is on the CCO realization. So this is just a follow-up of previous question. So you mentioned that the price have been under pressure. So the exit realization looks even lower than the average realization for the quarter. So the price have continued to trend down even in July after this June number of 20,800.
Is largely, Pratik, remained in the same range. There is commodities, there is movements of 1,000, 2,000 rupees. It remains in that range only. It hasn't broken out of range.
Okay. And sir, like you have mentioned about, yourself slowing down on Kpix on chlorine and otherwise. So any feedback you would have for like industry, like how like others or most of the capacities are now online for caustic in terms of domestic production?
No, you would have recollect some time back. Grasim also made a statement that their expansion plans also they're revisiting the timing, and I think because of this COVID crisis, which is impacting India and the world, and commodity prices are having a negative impact, have been impacted negatively because of the availability of product and the consumer markets not picking up adequately. I think we'll take a decision in due course because the expansion plans are very much on the agenda. That's something we are keen to do and maintain our position as a major player in the Indian market. So we'll take a decision in due course of time.
And anything specific we are doing on cost front in this segment?
Pardon me?
Like anything specific? I mean, besides, I mean, pricing is more of an industry phenomena, but anything on cost front which we are doing to, I think, control cost or fixed cost?
Yeah, that is something which actually, I think, as we mentioned earlier, that as the corona problem started, we had CFTs, cross-functional teams set up in all our businesses with the objective of revisiting our entire way of working, revisiting our organization, revisiting our purchasing strategies, revisiting our suppliers, and seeing how we can improve efficiencies across the board. And this has been a very interactive session with our suppliers and with our buyers, including our trade, etc., to see how we can have a sort of a benefit running across the board. Fortunately, coal prices came down, and energy is about 65% of the cost of production of chloralkali, of caustic soda chlorine, ECU. So with that, we've had an advantage of lower costs. Our efficiencies are running. We are consciously always working to be world class as far as our costs and efficiencies are concerned, and we are in that state at both our operations.
Also in Kota, we commissioned in Q4 last year a 66 megawatt power plant, which replaced our older power plant. So that will bring down our power cost for this year compared to last year.
Sure, sir. So that's it from my side. Thank you for your answer.
Thank you.
Thank you, sir. We have next question from the line of Rohan Gupta from Edelweiss. Please go ahead.
Hi, sir. Good afternoon. Sir, first question is on this plastics and PVC. So we have seen that though there is a decent demand from the pipe industry, except that muted in April, we have reached to 85% utilization in PVC. That's what you mentioned, right?
Yeah.
So how is the demand scenario now, and do you see that there is a further possibility of any price increase? The prices have already gone up, and how you see the utilization level going in next 2 to 3 quarters for PVC?
I think 2-3 things have happened which have been positive. One, the international prices also went up a little bit. So that has had a positive impact, because you may be aware that India imports over 50% of its annual requirement of PVC. Our domestic production is less than 50% of our annual requirement. So imports are very high. Some of the larger players have also got committed export orders which they are fulfilling. So that has led to a situation in India where, as you rightly said, the pipe industry is also moving better after the lockdown has been lifted. So it's difficult to say. I think, frankly, we just want to make a policy and a practical statement. Commodity prices, no one can predict. It depends so much on supply, demand, and the situation of the user, situation of the international market, situation of the logistics. All these things keep varying. Our attempt always is, how do we maximize our realization for the benefit of the company? And rightly so, the prices have gone up a little bit over the last month or two. And we sincerely hope to sustain. Our effort is on to see how we can explore newer markets, go a little further away from our normal market, so we can run at a higher capacity than 85. So that effort is on all the time.
And in caustic chlorine, sir, it is because of chlorine demand is under pressure right now. That's why our utilization is only ramped up to 65%, or it's overall lower demand of caustic soda which is impacting this business?
It is actually both. It is both. In fact, caustic is the one which created a lot of problem, due to which caustic prices fell very dramatically. And as you are aware, that ECU caustic also had dropped a lot, but that's fortunately picking up a little bit right now. Caustic is also running a little plus minus. But they both got affected, frankly, because, if you look at it, these 5-6 industries we talked about, they impact both these industries. Chlorine direct supplies and all that is something which is a positive sign, where exports at least of our chlorine buyers and value-added chemicals is moving, and that's picking up, so that's also a positive situation. But both of them are impacted because of the supply-demand side.
And how do you see that this chlorine demand picking up, and that can help us in ramping up the utilization level further, or the problem is still likely to continue for some more time for the chlorine side?
I think it depends so much on the GDP growth of the economy of India. one has to look at that in an overall capacity because caustic chlorine both are used in such a wide variety of user industries. As I mentioned earlier, textiles is having a tough time. Consumption there is low. Paper pulp is picking up, but not to the level of what they were earlier. So that's had its impact. But we do feel over the next two to three quarters, we should be in a much better position.
Rohan, textiles actually is a big user of chlorine as well as caustic soda. So it does impact both the sectors. I think it will be dependent how textile picks up for the further capacity utilization will depend on that also.
Right. Okay. And sir, third question, especially slightly on a long-term strategy of the company. So, sir, company like us, and which is already sitting on a solid balance sheet and with a sufficient cash flow generation. So, you made a statement that you are being cautious right now on chlorine downstream expansion. Actually, sir, I was expecting and wanted to hear a other way around statement that you are turning more bullish and want to increase the investment probably in the current scenario because the chemical scenario in India continues to remain bullish, irrespective of maybe 1 or 2 quarter impact of COVID. But a company like ours, which already sitting on a strong balance sheet and can also raise debt if required. So I just wanted to understand that why we are becoming a slightly more conservative in terms of putting capex and why not taking this as an opportunity to go ahead and make an aggressive investment either in a chlorine downstream or even in an associated chemical industry. I mean, I just wanted to hear your thought on that.
We actually, as we mentioned earlier, that we are aggressively looking at downstream development on the chlorine utilization front, organic and inorganic, both. And our teams are working. And whenever we get a good opportunity, we will definitely look at it in a much more serious way. We've discussed this matter at our senior management level as well as the board level. And we just want to make sure that we are doing it at a time, let's be honest, because the economy is under stress. So our approach is that we want a healthy balance sheet. At the same time, we have a good project, we will definitely invest in that. So there is activity going on.
So when you mentioned that inorganic growth opportunities, so this will, and you have been talking about it from almost quite some time now. So even in the current scenario where we have seen that many businesses probably are going through a stress time, so do you see that the valuations and the expectations from the other side of the party has now reduced and the opportunities are much more now and number of opportunities are much more now and we can expect something materializing in next maybe a year or something?
Rohan, we are actually actively looking at it. We have teams working on it and they are looking at exploring many opportunities. It's difficult to say each one and I think it's not fair to talk about companies that way. But in terms of overall, if it makes business sense, whatever the valuation, we will definitely look at it much more seriously.
Okay. So just last thing. So, sir, when you are looking in organic, so is it like you will be more comfortable in the commodity chemicals, more in line of our business, or you will be looking more specialty chemicals where you have also been seriously looking at the opportunities and have also hired a person in that and to see the opportunities there. So in organic, you will be seeing more in specialty chemicals or in line with the commodity chemicals?
No, it is in specialty chemicals. That is where we are wanting to focus on. In terms of this further downstream chemical utilization would be in specialty chemicals.
Okay. Will it be on agrochemicals, pharma, or textile chemicals and all?
There are areas you're looking at, because you're right, agro also utilizes and there's so many other products which also have combinations and the range is large. So we're looking at various options and alternatives.
Rohan, because the range is large, it is taking time to make up mind because it does require deeper analysis. So wait for some more time. I am sure you will hear more.
Okay, sir. Thanks a lot, sir, for answering this. Thank you so much.
Thank you.
Thank you, sir. We have next question from the line of Jyoti Amonkar from NMV Securities. Please go ahead.
Hello.
Hello.
Good afternoon, sir. Actually, my question was on the sugar division. So, the distillery that we have commissioned, so what is the operating days of a distillery? As of now, the 350 KLPD.
Yeah, so basically our the older distillery that we've commissioned, that has been running at roughly 330 days in the year. And the newer distillery was commissioned in December, and that we have yet to see. But our target and aim is to fully optimize the utilization and aim to run 330 days in a year.
In this year, in FY21?
In FY21, the new tender is yet to come. So depending on the new tender's pricing in terms of B-heavy ethanol, C ethanol, cane juice or syrup to be used for making ethanol, we've yet to finalize our structure. But our aim obviously will be to ensure that we move towards 100% utilization.
Okay. As of now, I think so both the capacities included, it's approx 60% capacity utilization somewhere.
I'm sorry?
In this, combining both the capacities of 150 and the new 200, it's somewhere near 60% capacity utilization.
No, we are running our distillery at full capacity.
Yeah.
Both of them.
Right, both of them.
Yeah.
Okay, fine.
Both
and one more question would be...
100%.
Hello?
It's 100% capacity utilization, Jyoti.
Okay, got it. And on the sugar, the new 38,000, production is somewhere near 70 lakh quintals in like the last 2 years from when it is commissioned, right? So what production do we expect in the coming years, like in next 1 to 2 years? In the same range, or it depends on the export we get and what our production would be for the next year?
There are 2 or 3 parameters over here once again. As I mentioned to you, depending on the ethanol, B-heavy ethanol pricing, the cane juice or syrup ethanol pricing, we will want to divert more sucrose into manufacture of ethanol and make less sugar comparatively, number one. Number 2, depending on the government's export policy, we would like to maximize our exports. As mentioned earlier, the government wanted to export 6 million tons of sugar this year, and most likely they will be able to export 5.5 million tons. Out of this 5.5 million tons, we will be exporting 22 lakh quintals of sugar.
Okay. Yeah, thank you. Those were my questions. Thanks a lot.
Thank you.
Thank you.
Thank you. We have next question from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah, good afternoon, sir, and thank you for giving me the opportunity, sir. Sir, firstly, sir, if you could explain, give a more clarity on the reduction in power cost with the replacement of the new power plant that is mentioned at Kota, sir. There.
Correct.
And what will be the annual reduction, sir, in the power cost?
JK, can you do that?
Yeah.
JK, we can't hear you.
As we reported in the past, Saket, we have invested about 240 crores, and we do expect about 25% return on that investment on an annualized basis. So which means on an annualized basis, it should give us a benefit of roughly about 60 crore or so.
60 crores strictly going to the bottom line?
Yes.
Okay, that is big. And sir, just to get the sense of the global caustic soda market, sir, as earlier the producers have been looking for ADD going forward, and here we are trying to export much of the quantity back into the outside India. So how does the position shape up, and what is the update on our petition for ADD, sir?
We are in fact with the government, in touch with the government very closely, as well as with NITI Aayog, and the Alkali Manufacturers Association is actively talking about this with the Chemical Ministry as well as with the Commerce Ministry. So I think with government we are on this. We sincerely hope something does happen on this situation the way it's going. But for every situation, you are aware there are two sides of a coin. So, there is a discussion from the other side saying, don't do it. We are pushing and saying, please look at it because of the impact on the industry, which is very severe. So it's moving at the same time by the industry also. But the good thing is industry is also aggressively looking at exporting, and that will take care of some of the surplus in the country. So that will be a positive impact on the domestic prices, which is majority of the sale of any company. So that focus is there. The flakes prices also are better than lye prices. So there's exports of flakes also which is happening, which is again a good value add, which is a future direction. So industry is looking at all alternatives and options to increase the ECU realization.
Hello?
Yeah.
Sir, at these prices also, sir, do they have incentives of exporting? Someone just to dwell on the point.
Yeah, I think, exports is not necessarily a financial decision only. It's also a strategic decision. So I think each company takes their own view, but companies are exporting, and so are we. So I think that's the direction we've decided to take.
Right, sir. And, sir, taking into account the position which is there for the chemical sector, also you talked about an inorganic opportunity in the specialty chemical. Is it related to the sugar sector itself, sir? Because where the derivatives are also being diverted to specialty ethoxylate and the nutraceuticals. Are we looking in that segment in any totality?
We, in fact, from the sugar industry point of view, you got rectified spirit to ethanol. That's a different chain altogether. That's a different value downstream product group altogether. So our chlorine one is different, and that is different. Our today focus is on the chlorine downstream. That's where we are looking at really.
Okay, and we did a JV also with the USA partner, sir, in the PVC compounding part.
Yeah.
Any update or on that front? Because what the numbers we have reported for last year, we didn't find anything material to it. Anything which you want to share going forward?
So I think that business is a comparatively smaller business, and the specialized products we are getting for various markets, part of it was for the auto industry, and auto industry has been under stress. So that got impacted. But we have the other areas of electrical also and medical, etc. So there the focus is strong. So it's a stable business. They are working to improve further, but it's not a large part of our portfolio.
Very small understanding on the sugar. Sir, I think that this year, so the agri portfolio is more stable in terms of giving money the way forward than the chemical segment. So, sir, as you have earlier mentioned about a policy change in the way incentives were calculated, we did exported a large quantum. So, what are the incentives, sir, which we are getting out of sugar export? And there was a policy change last year as per the sugarcane prices than the revenue one. So how have this affected and has accelerated the export of sugar?
No, the incentive policy, Saket, is very clear now that every ton of sugar that you export, government gives roughly about 10,800 rupees per ton as the incentive for taking care of various expenses. Earlier, it wasn't linked to export only, it was also linked to cane crush, etc., etc. So that's the major change, that instead of relating it to cane crush, is related direct to export now. And that is what has given a fillip to export. Like JMD mentioned, the export this year is expected to be almost 5.5 lakh million ton, which is unprecedented. So the incentive scheme has worked in that sense.
And sir, lastly, point about the seed portfolio also, sir. We have heard about the new seed policy coming up from the government side, in which custom production will be allowed, and the registration and all, and the patent part will go away. So you can receive customized seed, and then we can work on the same and give the production to the producing country without any the patent being disturbed. So how what opportunity do we have in the seed portfolio, and so how the seasonality parts are placed for in the bio seed segment, sir?
No, I don't think we have understood your question clearly, frankly. At least I have not.
Sir, I was talking about the new seed policy that has come up, wherein they have mentioned that custom production can be done without. So there was a patent issue when we used to receive a assignment from a country which needed bulk of the seed production. They used to give us the type of seeds they wanted for bulk production, and when at the time of export there was some patent issues which needs to be settled. Now that has gone away, so the job work can be done very easily. So I wanted to understand what kind of opportunity opens up in the global seed market for us.
So we are not looking at custom production of seeds. Our seed business is based on in-house research, and we do basic research, and our seed business is based on our own IPR for both the domestic market and now the Philippines market. The other two markets we have exited the business, Vietnam and Indonesia.
So, sir,
we are not in the business of custom seed production.
Okay, sir. And sir, so what are the cyclicalities? I'm coming to the Q, sir. What are the cyclicalities in the business on a quarterly basis? How should we look at the numbers? And then coming to the Q.
It's a seasonal business. The first quarter is the main business quarter. There's some spillover to the second quarter, and then there is a smaller sale in the third quarter.
And how is the fourth quarter, sir?
Fourth quarter is very marginal.
Very
much. Vegetable seed picks up, so yes, there is some sale in fourth quarter also.
I would come in the queue, sir. I have a few ones, so thank you, sir, for the opportunity.
Thank you, sir. We have next question from the line of Bharat Sheth from Quest Investment Advisors. Please go ahead.
Hello.
Yes, Bharat.
Sir, I mean to understand a little better on this sugar business, you said that one side we say that we are awaiting a new policy from the government on the ethanol. I mean, not policy but tender. But simultaneously we are saying that we are operating at 100%. So, I mean, whatever ethanol is produced currently we are selling it. So this new price which we are looking is for sugar year 2021 or which year?
See, the ethanol year runs from December to November.
Okay.
We already have the tender allotted to us for the supplies up to the November 20.
Correct.
You are right. What we are looking at is the pattern to be followed or the product mix to be followed for the 2021 season.
Okay. So, sir, in opening remark, you said that we had almost doubled our ethanol supply in this quarter. So, whereas one refinery which has started in the December, as you said. So, how do we see? I mean, vis-a-vis this last year full 1920 vis-a-vis 2021 additional supply of ethanol?
See, at this new capacity, which is 350 KLD, we can produce 10 to 11 crore liter ethanol per year, right? And our intention is to run at full capacity, both on C and B heavy, whatever works out. So that's how you should look at that. We should be aiming at about 10 to 11 crore liter sale on an annualized basis.
And how much was the for previous year FY 1920?
It wasn't. I don't have that ready number in terms of quantity.
Okay.
But obviously it was less because this distillery was commissioned only in December.
Correct. So, and second thing, sir, you said that we are also looking for to produce ethanol from cane juice. So this new distillery which we have started is 200 KLPD, correct? And 150 is the old one. Is that fair understanding?
Yeah.
So to understand, I mean, these both the refineries, I mean, are capable of doing from the cane juice, or we need some modification if we have to go for cane juice?
We haven't done cane juice so far. We have only done B heavy.
Okay.
Our calculation on the present price pattern shows that cane juice is not viable right now economically. Okay. So I think it will depend on what kind of prices is fixed, and then we will have to experiment that. Right now we have only done B heavy.
Ajit, I think your phone is on mute.
Hello.
Oh, that's right. I think some minor modifications are required to be able to use cane juice. However, as Mr. Jain mentioned right now, it all depends on the pricing. If the pricing from cane juice is more attractive, then we would like to use the cane juice route so that we can divert more sucrose into making ethanol.
Okay. Sir, and one more thing, that about couple of years back, even government came out with this CNG policy, gas, produced from the press mud and various waste. So, whereas the sugar, where the press mud or waste is availability is difficult, whereas press mud is easily available with our sugar plant. So, are we looking to use those press mud for the generation of biogas? So, not CNG, biogas.
No, what we do is actually we give the press mud to the farmers so that the farmers can use this as an organic fertilizer in their fields. And this program is working very successfully in all our 4 units.
Okay, so that, okay. And this 200 KLPD is how is better efficiency wise than the 150 KLPD?
No, see, actually, Bharat, in terms of the efficiencies, we've optimized the efficiencies of both the plants. In terms of vintage, both the plants are roughly 1 year apart.
Okay.
So we've taken the learnings from the 150 KL and also implemented it in the 200 KL. At the same time, we've improved the 150 KL from our learnings. So both are at par.
So, sir, and now coming to this Agri Input, if we look at our bioseed, special nutrient and fertilizer on annual basis, so how much each contribute, and how do we see all these 3 business, for 2021 and going ahead?
JK.
See, you are talking about bioseed and SFS, right?
And as well as fertilizer also. So how much each contribute an annualized basis? Because the quarterly number is seed is typically.
So if you see broad numbers, bioseed has about 400 crore sale on an annual basis.
Okay.
SFS has about 800, and fertilizer, of course, sale value varies depending upon the price, but we produce about 4 lakh ton of urea every year. Now, as visible in the first quarter trend, SFS and bioseed this year are registering good growth, and the outlook is that at least they should have around 20% kind of growth for the full year. Plus, accordingly, the profit should also go up.
Okay. So, how much, sir, EBITDA for each business, is it possible to get some kind of, then the average, Agri Input business, some kind of,
the profit pattern is different because SFS is more of a traded business. The PBDIT will be roughly in the range of 10% of turnover, whereas bioseed will have little higher depending upon the volume. And fertilizer is not on EBITDA margin basis because the price is
per ton. It is per ton.
Yeah, fertilizer is a per ton kind of thing.
And bioseed is, you said we have corn and hybrid rice. So are we looking to expand the portfolio?
No, we have cotton, we have corn, we have paddy, and we have vegetables. We have bajra also, but that's small. So right now the objective is to increase the product offerings within each of these.
So you said corn, hybrid rice and?
Corn, hybrid rice, cotton, bajra and vegetables.
Okay. And sir, how do we try to, with this vegetable is contributing around what level?
I think total will be about 12% kind of turnover. So roughly 40 to 50 crores will come from vegetable on an annualized basis.
So this business is seasonal, so a lot of OPEX, cost is affect us in Q2 as well as Q3. So what exactly our long-term strategy to make this whole business evenly spread during the year?
Cannot be evenly spread. It's linked to the two cycles of Kharif and Rabi.
Okay.
Whereas the nature of costs, because of heavy research costs, we are a very research-intensive business in bioseed.
Okay.
They are spread evenly. That is the nature of the business, but the value of the business comes from maximizing sales, which comes from high-quality research. So we are working in that direction, and we are hoping to see further growth in the coming years.
Okay. But is it correct to understand that vegetable is, more evenly, spreaded?
No. Vegetables also have seasonality. Okay. But see, just to add to what VCMD has said, that even at a country level, cotton is a big crop for seed industry.
Correct.
And cotton takes place only in Kharif. So therefore, you will always have seasonality in this particular industry. You can't have even sales.
Okay. Thanks. That's all from my side. Thank you very much.
Thank you.
Thank you, sir. We have next question from the line of Rohit Nagraj from Sunidhi Securities. Please go ahead.
Yeah, thanks for the follow-up.
Hi, Rohit.
Yeah, hi. Thank you, sir. So since we will not be having any serious expansion plan, so what is the kind of debt reduction that we see for FY21 and the consequent cost of debt?
I don't think we are saying we will not have Kpix. I think all that we have said is that we are right now reworking the timings of the announced Kpix, which is the Bharuch Kpix of 1,070 crore. And we are also looking at the downstream chemicals. So it may be the timings could be little flexible, but I think we will invest and we will invest in growth. I don't think we are changing that plan. So therefore, what we have said as a guideline going forward, that we would like to keep our debt to EBITDA between 1.5 to 2 times kind of thing. So we will remain within that range is what we can say. Other things will depend on the timings and how economy takes off. As far as cost is concerned, of course, the cost has gone down compared to last year. As you know, the CP rates are now between 4.5%. So we do borrow working capital through CP market. The long-term loan rates are up to about 7% kind of thing.
Okay, thank you, sir. Sir, and any sense on the subsidy front in terms of the DBTL on fertilizer? It's been in the works for last couple of years. How is it shaping up, or any idea about what's going to happen?
Well, I think as we mentioned earlier, the government's finances are under a lot of stress. Their tax revenues have come down, and they spent a lot of money and have to spend a lot of money to tackle the corona problem also. So our apprehension is that the outstandings will go up. It's already gone up compared to the previous years, as I mentioned earlier. It's already about 660 crores. We don't know. The industry is working very actively with the government and the finance ministry, the Department of Fertilizers, saying please release some more funds, please arrange for some funds, please arrange for credit for gas, which we buy from GAIL. and the interest cost on that, government should pay. So there are various avenues of dialogues going on, and we hope something happens, but the reality is the government is stretched for funds. So that is likely to impact the fertilizer industry.
Okay, thanks for the entire explanation. So on the cost optimization front, we have taken certain measures. So what is the benefit that we are expecting on a yearly basis? Any number to that?
JK, can you give something on that? I think it's...
Well, see, numbers, boss, is difficult to predict right now. I think what we are trying to say is that at least cost does not go up vis-a-vis last year is the first objective. I think depending upon how economy takes off, we will see whether we need any other measure of cost reduction.
Okay, and sir, one last question on the sugar. So sugar revenues have been up by 80%, but EBIT has been lower. And we have mentioned that there is one-time impact because last year there was an income. Is there any other factor to it, or just because of the higher depreciation and interest?
No, 2-3 things. See, one is, of course, like we have mentioned in our release, the sugar realization were about 50 rupees a quintal lower than same period last year. Also, the recovery was little lower than last year. Last year we were about 12.1. This time for the season recovery has been 11.92. So that has meant higher cost. But besides these two factors, there is no other factor for the profit situation.
Sure. Thanks for all the answers and best of luck, sir.
Thank you. Thank you.
So we have the last question from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yes. Thank you for the follow-up opportunity. Sir, we did move into the potable alcohol segment, sir. What is the update on the same? We have started, sir.
Sorry?
Can
you hear me?
Yes, sir.
Yeah, Saket, basically there's an obligation by the UP government where we have to reserve a certain level of molasses. In the current scenario, it is 18% of the total molasses produced has to be sold for manufacturing of country liquor.
Right.
So essentially, we are value adding on this quantum of molasses to do the potable country liquor ourselves, instead of selling it at a subsidized price to other companies. That's the only rationale.
Sir. I got the rationale, sir. But what is the update? Have we this season? Are we doing anything on this front?
We should be commissioning it in Q4 of this year. Q4 1.
Okay, sir. Sir, in the opening, sir, you gave that the utilization levels are currently 70% for caustic soda and 80 to 85% for the PVC segment. And
right.
This is in comparison to what was the average utilization for the June quarter, sir, for both the segments?
June quarter, if you say quarter as a whole, chemical was utilized to the extent of 51%. But June month, it was about 72%. PVC actually started in mid-May only, so April and first fortnight of May we had no production. It has only picked up in the second fortnight of May and June.
So, sir, 40% volume growth we should expect Q on Q, sir, just on the basis of the higher utilization levels that we have undergone to.
Yes, if you are taking Q on Q, yes, then it should improve.
It should improve. 40% volume growth should be there, sir. Sir, if we go to your the subsidy part, we find that there was one we exited the SS segment, the Sri Ganpati fertilizer, and that was that subsidy was profit making. So and even the last year also we did post profit. And the subsidy which is showing losses is the infrastructure part. So what is our strategy going forward?
No, I don't think you are right in saying that SGFL was making profit.
Okay, sir. Sorry.
Actually was just breaking even at PBDIT level, was not able to even recover interest for working capital.
Okay.
So it wasn't making profit, it wasn't growing, and as we decided to exit bulk fertilizer, it made sense to exit that also. Now, as far as infra is concerned, I think is not making losses. It had one project which was allotted, which has been cancelled. So the loss this year is only representing the write-off of CWIP that we had incurred on that. That project was not viable, therefore there was no point in starting that project.
So going forward, what will be the contribution, sir? What is the next year going for infrastructure company?
No, we are not investing in the power projects. As I said, that has already been surrendered.
So no impact going forward, sir.
Yeah.
Last point, sir, on the fertilizer business, the urea part, sir, is it a strategic investment? So we are very old player in the urea segment and a big one also. So looking at what the capital employed looks, wherein year on year there has been a growth, and this being a subsidized product, government finances are at strain. Subsidy, it will be elongated for the release of subsidy. So, what are the reasons that we want to continue in this segment of the urea part? If we take the capital employed, sir, it was 600 crore. This time it is 768 crore. But what is the thought process, sir, for the urea?
See, urea actually has been a traditional, and it was one of the first factories set up at Kota. And our Shriram Urea brand is very well known in the marketplace also. Along with that, we have added many other products with our dealership network and to the farmers. So that's how the urea business still carries on. And it's a traditional business we've been in. We've added value through various other products, which are riding on the back of urea fertilizers, which was started over 50 years ago. Our plant was set up in 1969. So it's an established business, and that's how we are in it.
But do you look at that the capital employed in this segment is remunerative, sir? In that sense, if the same is being deployed to a different vertical of yours, does it make more sense, or it is to remove the vagaries of securities and other business? This is a solid platform which you want to continue.
Well, this is a challenge. I think with the government, it is a challenge. Industry is also saying, please revisit the way you are looking at giving subsidy. Government is talking about giving direct subsidy to farmers, so you get a price straight from the farmers rather than going through the subsidy to the farmers from the government through the industry. So we are talking to government on various avenues to try to smoothen this out. Let's see what happens. We are not sure what will happen.
Sorry to interpret, but foreign player has envisaged interest earlier. So when Tata Chemical exited the segment, so have you people any time looked for completely making an exit into the sector and deploying the money to better ROC segment, sir? Just a thought process behind.
No, we've not talked to any partners outside, nor have we looked at this.
And lastly, sir, in the earlier also when we have asked about the demerger part or creating value for the shareholders, you told that time and being the same has been considered at the board level. So just as investors and analysts, we wanted to know, sir, what is the critical mass at point at which where this is not culminating into it? What should we investor look at? Ki bhai, ye scale, ye size, or this profitability of this segment will reach, then we can look forward for it. So is there any thought process behind it, or are we scratching the surface right now, sir?
I think this is an issue which is under discussion, as you rightly said in the past also, that we've debated this point, discussed this point, estimated what is the value add. There are pros to a joint and pros to a separate setups and companies. So this is under discussion all the time. I think at the moment, due to Corona, the whole focus and attention is different, and we are looking at a different way. But this is not something which is on the front agenda.
Oh. Right. And the transcript is available, sir, to us, sir, after the con call?
Pardon?
The transcript is made available at the website, sir? Sorry, I have not gone through it.
It will be in a day or so.
It would be uploaded, sir.
Yeah.
Right, sir. Sir, thank you for the time and the effort, sir. And we hope for good and well-being of all the people, sir. And hope this pandemic ends and we could live our normal life again.
Very much. Thank you so much.
Thank you for the good work, sir, you are doing for us, sir, and the continuity of the same, sir. All the best to the team, sir. Thank you.
Thank you so much. Thank you very much.
Thank you, sir. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments. Over to you, sir.
Thank you. Ladies and gentlemen, we thank you for your participation in our Q1 Financial Year 21 earnings conference call. We will continue to work on our strategic direction as discussed above. Our balance sheet allows us to keep investing in growth even during these tough times. We expect that over the next few quarters, as the economic activity improves, the volumes and prices will improve. We simultaneously strive to adopt contemporary technologies and upgrading of our processes and practices to strengthen our value proposition to the customers and deepen the employee engagement within the company. Once again, thank you very much, and we wish you and your families good health and safety from this corona problem at this time. Thank you so much and goodbye.
Thank you very much, sir. Ladies and gentlemen, on behalf of DCM Shriram Limited, that concludes this conference call. Thank you for joining with us, and you may now disconnect your lines.
Thank you.